What's up, traders? Let's talk about buy alerts. Buy alerts can be an amazing resource. However, they get horrible rep. Why? Because traders use them incorrectly. They think that you can just follow the buy alerts without any sort of trading plan or risk management strategy and they'll be successful. And then they come to realize that that's not the case. So in this video, I want to teach you guys how to actually approach buy alerts the right way so you can make a profit. So let's go over to my screen in 3, 2, 1. All right, guys. So first and foremost, we have to understand what buy alerts are and the strategy or thought process behind the person providing them. Typically, buy alerts are simply levels of interest where a high probability setup is forming, and they are typically in support and resistance or market structure areas, such as chart patterns. So let's look at these 3 buy alerts from Friday as an example, and you're going to notice that each of them is based on a support or resistance level or trend line. The first alert of that day was Tesla puts at break of 581.56 lows. Now, what does this mean? Basically, we're looking for a continuation move here. We are obviously on a downtrend on this date, and this is where the play took place. I sent this alert early in the morning, and this is what I'm looking at as I'm sending this alert. This is my thought process. We've come to a downtrend, right? And we've hit a support level. I'm thinking, since we're making lower highs into the support level, there's a possibility that we could break here. Once again, I am not a time traveler. I'm not some sort of genius. I'm simply suggesting a high probability setup that might work. That is the key point in all of this. Just because somebody sends a buy alert does not mean it's guaranteed. Guys, you still need a proper risk management strategy. You guys still need to do proper position sizing, which is key, right? And you still need to understand where to place your stop losses, where to take profits, and all of that. Now, let's see what we're looking at here. We have this support level here. Once again, the number was 581.56. So I'm going to try to get close to that. 581.56, we're looking at around there, 5.7, off by 1 cent. So this is my entry point when we break here. Where do I stop myself out? Well, personally, I would like to stop myself out in this area here where we have some support and some resistance as well. So around this area here, depending on, I want to look at the price action here, how we react in this area, and then I'll stop myself out. But I will not let it cross the highs of this rectangle here. Okay, so I'm going to expand this just a little bit more. And here you guys can see that we do break. So this would trigger my entry, right? Sometimes I give it, I don't enter right at the break. I make sure that the candle closes, which this one did. And then the next one came in red. So I entered either at the close of this candle or at the open of this one. And you guys can see here the rejection right away. That is not a good sign. That is not a good sign. However, we never got to my stop out point. So I'm not shaking. I'm not scared. This is still going according to plan. And later on, you guys can see that we start dropping once more. And what I want to do here now that we have broken, I want to make sure that I lower my stop loss from here and set it here at this level here, which is my entry, right? So as soon as the trade starts going in my direction, now I want to lower my stop loss at a break-even point, or maybe slightly an even smaller loss. And here you guys can see that we respect this support here, and we come here and we respect it. Once again, we get rejected. And then what do we have? A beautiful, nice move, right? Now, guys, it is unreasonable for traders to assume that because the alert comes from me, to pretend or assume that it's going to work out and just throw all your money in there, have no risk management plan. It's not a very good idea. Now let's talk about this stop loss here. If I know that I'm entering at a break of 581 and my stop loss is all the way at 594, which is a huge, this is a lot of room here. Do I want to go in with a heavy size? The answer is no. Because if I go in heavy, chances are from here to here, my stop loss level is too far. So my loss is going to be tremendous. If I want to go in with more size, then I would probably make my stop something maybe down, something like this. Or, you know, if I go even heavier than that, I might want to just stop myself out here at this, at the open of the candle that sparked the move in the first place. So you guys have to consider how far your stop loss is to understand or know how much capital you want to put in that particular trade. It is important to understand that if you guys go too heavy here, you know, from here to here could be a huge loss. However, if you position size correctly, from here to here can be just the right amount of loss that won't hurt you in a way that's going to set you back too much. So always consider your possible stop loss levels and use that to calculate your position size. Now, let's go over the next alert, which is SPY puts. This one is a little bit different, and I actually have it marked already on the charts. This one reads SPY puts at break of trend line support. And I was looking at something like this, right? This is exactly what we did. We were obviously bouncing off of some support here. As soon as we break, there is our entry, right? So here is our entry. Our stop loss could be either here or even, you know, here. So around this area, basically. I like to draw rectangles, you know, draw an overall area instead of lines for the sake of keeping my charts a little cleaner. But here, this is a very nice move. And if you guys have a proper, you know, take profit area, such as the support here, you guys would have been all right and caught almost the entire move. We're looking at this support area here. Let's look at the next one, which is on the cubes, right? Similar to the other one, we have almost the same setup as, you know, these markets go pretty much hand in hand. We have a break of trend line support, and you guys can see the move. Just like that, we have support here. That's exactly as low as we reach. So these are just 3 alerts that I sent on Friday. I thought I would use them as an example, but actually here we can see a trade setup similar to the ones that we've gone over on the QQQ as well. So let's check it out. We have a support level here. So we're looking to break this support here. As soon as we break, we would enter, right? So where is our stop loss? It could be, guys, it could be this trend line resistance here. It could be this resistance level here, or this resistance here, or maybe even, you know, this resistance up here. The further out the stop loss, the less capital you have to put on that trade, guys. So here we can see that, you know, we actually bounced off of this previous support, which is now acting as resistance, and we have a nice move, right? But it makes no sense to go really heavy on size and look to stop yourself out here. It's going to hurt you, right? If I were to go really heavy, I want to make sure I stop myself out here to control that loss. If I'm going in moderately, you know, not too much, not too little, maybe this is a good stop loss for me. And it really also depends on your personality, your style of trading, and what makes you feel comfortable as a trader. If you're someone that does not like to stop yourself out, you might want to go with a smaller position size and a little wider stop loss room to give the trade a little more buffer. However, if you're someone that likes to go heavy and just stop themselves out because the profits far outweigh the profits of trades where you have a bigger stop loss, since you're going with more position size, then you might want to consider this level right here. So once again, it's all relative to you and the way that you want to trade it. Something else that I wanted to touch on, guys, is that some buy alerts out there are sent on the spot when that person enters. What I mean is, a trader that sends alerts will enter before you right at this level here and then type out the alert, which kind of doesn't give you enough time to set up, right? So in this situation, you would have been okay because we consolidated for quite a bit. But what if that trader sends this alert here as they enter. They enter their position and then they go to Discord, send their alert. And they entered here. Now it's too late for you. As by the time you see this and you go set up, look for the contract that fits your capital best, and you decide to enter yourself, you're probably entering here or here, which puts you very far from that entry point. Not only now are you chasing, you're very far from your stop loss, right? So if you got in here, your stop loss would be either here or here, which is too much. You don't want to be in that situation. So if you guys are going to follow some alerts, make sure that you are following alerts from traders that send them as the setup is happening, so you guys have time to set up like I do. Now, the next thing that I want to touch on is that some other traders type out what contract exactly they are buying. Now, this is not good because depending on your account size, you might not want to follow that trader. Let me explain. Let's assume that you have a $5,000 account and XYZ trader is buying an Amazon call at the money, and his call is worth $2,000 or $2,500 to make it simpler. That means that if you were to follow and buy that same contract, you'd be spending 50% of your entire account into one position. This is a horrible mistake because if you're wrong, you are going to be in a bit of a pickle. You are going to be in a bigger loss than you would want to. So do not do this, guys. I don't personally give you guys what contracts I buy because I want to make sure that whatever contracts you guys buy fits your account size. A good rule of thumb is to not buy anything under 20 cents of delta. So make sure your delta is always higher than 0.20. However, make sure that you're never ever spending more than 10% of your account in one contract. So if you have $1,000 account, maybe you want to stick to trade something like Apple, which has contracts, that are quite affordable in that price range. So let's go over to Apple right here and check out these contracts to show you guys exactly what I mean. Apple right now has a contract for 96 cents with a 28 delta. You have a good delta here. You're putting less than 10% of your account, which is still aggressive, but since you have a $1,000 account, you do need to unfortunately put a little more risk to grow a little quicker than, somebody with a $10,000 account. I wouldn't recommend someone with a $10,000 account to put 10% of their account into one single trade. So it's all relative to your position size and how aggressive you're willing to be. However, under any circumstances, would I suggest more than 10%. So guys, that is it for this one. I hope you guys now have a better idea on how to follow buy alerts and how to do it safely. If you guys have any questions, you can reach me on Discord, GreenEveryDay, and I will see you guys on another video.